Where is it? Where is it now? Where did I put it? Guys, where did I put my microphone? Oh, yeah, it's here. Don't laugh at me, guys. I'm getting old. You will get old one day. Also. Hello guys, how are you? I hope you're doing great. I'm great if you want to know. Today we'll have something like trading one-on-one. So we are going more into technical details regarding the training. But before that, let's see how we ended up here. Why are we talking about trading today? Why are we talking about how to put an order, how to make money in this way, in this specific way? So if you recall, if you go back through all of my episodes till now, and I encourage you to do so, because they are put in line in some logical way so that you understand why are we talking about this today. If you're just starting to listening to this podcast right now and wondering why I'm talking about trading, what does it do with anything, because you have to go way back. First of all, is to change your mindset. That's the prerequisite. There is no way, if you want to change in your life, change in your environment, then you need to change. It's completely stupid and it's futile to want someone else to change and the world around you to change. They will never change. It doesn't make any kind of sense to insist on that. You have to change in order to change your life. And if you recall, we are talking about how to escape the ordinary. So we want to become an extraordinary. And to do so, we need goals. And I said that my personal goal is to become financially independent. And financially independent means that I want to do what I want, when I want, and I will always do something. I'm not one of those who will lay down and watch Netflix all day long. I will do something, but I want to manage my time. I want to do what I think it has to be done, what I personally enjoy, what I love. And for that, I have to be in a place where practically money is not an issue. And to do so, you have to have some kind of income streams. Those can be active and passive. In order to get some kind of passive incomes, if you're not born rich, then you have to establish those kind of income streams. And how to do those is to start investing. And how can you invest? Well, first of all, you have to learn how to budget yourself. And how to budget yourself? First of all, you have to understand money. What is money? It's practically trash. It's a piece of paper that it's not worth anything because it's a stored energy that you have to put somewhere to work in order to get something in return. And it's the best that you save some money, some certain amount, and then rest of it you invest because it will lose value over time. You have to put it in work. By investing, you put it in stocks, crypto, bonds, gold, real estate, companies, your own company, your own personal skills in order to get even more, let's say, active incomes. And that's the whole game, how to escape the matrix and so on. That's why we had all of those episodes till today. And the previous episodes were about trading itself. So the markets, what is the charts, the graph, the green candles, the red candles, the trends, how to read those graphs, and so on. And now we need to see what is trading and how to do it. What are the mechanisms? First of all, I have to tell you that I'm not a professional trader. I do some trading by myself, but I'm not in any regards professional trader, and please don't take any kind of advice from me. I'm just recording what I do in my life, what I do in my, let's say, with my money, with my investments. And this episode or this podcast shouldn't be taken in any regards as some kind of financial advice. So do your own research and do with your money as you wish. I'm just telling you my story and how I am managing my budget. So one of the parts of the budget is to invest, and part of this investing is going into different kinds of asset classes, and also one part of this money for investments goes to trading. And trading basically is the primordial, the real basics of everything. Because you can work for somebody else and you can work in different kinds of companies and you don't get the same effect of this trading, because everything in your life, in your, especially your professional life, when you're working, is revolving around trading. So you do some kind of services, or you prepare or make some kind of products, then you sell it. By selling it, you are exchanging, you are trading with that. So everything is about trading. You trade your time to do something, to get some skills. You trade your time to prepare some product. Then you trade that product for money to buy some more skills, or to buy another piece of machinery that will help you to become even more faster and more competitive in the markets, and so on and so forth. And everything is about trading. And the first and the basics skill to know is to how to trade. And you can, when you trade inside of a large corporation business, then this trading is not, let's say, naked. It's not so visible, because at the end of the day there are a lot of services that that company provides. You're maybe only one cog in a series of different cogs machine that works toward this ultimate or our unified goal to sell more products, to sell more goods, or to sell more services. But also, one of the activities that you can do is to do trading, bare trading by itself, just by looking at the price, by looking at the supply, demand, and entering the markets, putting your capital inside, so your money, own money, and do some kind of buying and selling of the assets in particular time. And that's all that is to trading. And trading is very interesting because it puts you in a very, let's say, it's uncomfortable situation, because you have, where when you are trading and you are at your trading platform, you take the full responsibility of everything that happens there. When you buy it, when you sell it, will you make some money, make some profit? Will you lose some money? Will you over leverage yourself and maybe you will be liquidated or something like that? You are the only one to blame. Either way, is it good or bad? You are the only person that's responsible, and the total outcome of your trading, let's say, sessions and activities is directly correlated, it's hardwired with your time that you spend at the trading station, with your skills, with your knowledge, with your experience and so on. So it's only you and the trading platform, and that's why it's so simple, and that's why it's so powerful. And then you will learn how much you are worth and how much you know, and that's the playground where the big boys play. So in order to start, once more, before we start, I'm not a professional trader. Do your own research. I'm not like, it's like flying a plane. I'm not a pilot, professional pilot. I understand how the airplane works, how to lift up the landing gear, how to increase the throttle, how to maybe extend the flaps. And I know where these controls are situated on the control panel, but in no way I am a professional pilot. I can get the plane off the ground, but I'm not certified in any way. So just for you to know. What we have said last time, and the most important thing that I have said last time, if you have something that you are trading with, I'm going to use Bitcoin because I love Bitcoin. I'm doing a lot of crypto and it's easier for me, but it can be any asset class that you want. It can be some kind of real estate, it can be gold, it can be oil, it can be gas, it can be some kind of a company stock, it doesn't matter. But let's say it's Bitcoin. And this is the graph of a Bitcoin price. Say it's $100K. It's Bitcoin over USD or stablecoin USDT. Doesn't matter what stablecoin is. Let's say this is dollar and this is time. And this is from, let's say, 2015. It doesn't matter. Let's say 2015. The biggest thing that you have to know and you have to remember when you're doing trading, don't be, let's say, stupid. Don't go into some kind of degen trading, and don't go with the FOMO, with the fear of missing out. If everybody's buying, I have to buy. If everybody's selling, I have to sell. No, just forget about it. Don't listen to your barbers, to your taxi drivers, and to the lady who is giving you lunch. You have to buy like a normal trader. Just think with your head. You have to buy when the price is low, and you have to sell when the price is high. Then you have to buy when the price is low, and you have to sell when the price is high. Of course, this is not an exact science. You don't know when the price will be at its highest peak, but nevertheless, you will sell it once you are in profit, when the price is higher than the price you paid for, obviously. So that's the whole game. Don't take advices for different kind of people when you have to buy it. Just simply look, and if you believe in that asset class, if you believe that it will perform in the future because of this or that or some kind of macroeconomic situation, of the political situation, of the money, of the supply, of the demand, and so on, then you make some kind of rational decision with minimal risk. But at the end of the day, it's buy low and sell high. Also, you have to know these terms. There is something that is called a bull market and a bear market. The bull market is a market when the price is continuously rising. So this would be a bull market. So this would be a bull market. This would be a bull market. So these are the bull markets. And the bear markets, like a bear, like an animal. This would be a bear market, just for the terminology that you know what we are speaking of. Bitcoin is very interesting because it has a 4-year cycle. And when you are looking at the graphs, there is some kind of pattern that are repeating themselves in 4-year time frame, because every 4 years the Bitcoin is undergoing a process that's called halving. So I have now shown you what is a bull market, what is a bear market. Also, there is something that's called a value and a margin. So if we are talking about the margin, it's the amount of money that you are putting in an order when you're buying or selling. It's not the same thing as a value. It can be the same thing, but if you're using leverage, so if you're using leverage times, let's say 10, then the margin, let's say 100. If you're having leverage times 10, then the value is 1000. Because the value indicates the amount of money that you are entering with in an order when you are placing an order, the total amount of money. In this 1900 is borrowed money and 100 is your money. Okay? And your money is called the margin, and this is the borrowed part of the money. Just to be on the same side. Because when you're entering the trade, then the platforms where you trade often ask you how much value do you want to put, or how much margin do you want to put, and how much leverage you want to put and set, so that you understand. Next time we will try to go into one of the crypto exchange platforms for trading, then you will see all of these terms like leverage, margin, value, orders, so that you understand what we are talking about. There are different kinds of orders that you can place when you are trading. Once more, so this is the markets, this is the graph of the price, let's say, of the Bitcoin. And when you want to trade on the trading platform, so that is the place where you are trading. So there are a lot of different kinds of online trading platforms that you can use. And if you want to execute a trade, a specific trade, that's called an order. So you have to place an order. You can place two types of order. It can be a buy order, and it can be a sell order. Sell order. So it depends what you want. Maybe you want to buy Bitcoin at a certain price, or you want to sell your Bitcoin at a certain price. There are different types of orders. One type of order, it's called market order. Basically what it means, let's say we are currently here and the Bitcoin will go, let's say like this in the future. So this is today. At this point, when you are looking at the graph, you can do both things. You can buy and you can sell at this price. So the current price, it's, let's say, 98,500. So $98,500 per one Bitcoin. And if you want to buy it or sell it immediately at this price, then you place a market order. Market order says that it will try to get an offer on the market that is 98,500. So it tries to find a guy who is willing to, if you're buying, who is willing to sell you Bitcoin for this kind of amount, or the nearest guy to this, let's say it can be 98,50, 502. Doesn't matter, but it means I want to buy it now and I want to buy it immediately, or I want to sell it now and I want to sell it immediately at this specific price. This is market order. The next type of order that you can have, it's called a limit order. What it means that you are putting an order saying that you are willing to buy Bitcoin in the future, let's say for a certain price. Let's say it's 98,500 now, but you don't want to buy Bitcoin at this price, particular price. You want to buy Bitcoin at 90,000. And then you place a so-called limit order here. It's $90,000. And you put an order here saying if the price retracts back to this level, then the trading platform will automatically execute this limit order and you will enter the trade. So you also, for this limit order, you can say, do you want to buy or do you want to sell at a specific price? So in this particular scenario, if you want to buy, obviously, as I said before, buy low and sell high. It makes sense, right? So that's why if the price is now 98,500, if you're putting a limit order, of course you will, and you want to buy, let's say Bitcoin, of course, then you will place an order that's below the current price because you want to grab Bitcoin cheap as possible. But if you put it here, let's say on $50,000, you can also do this and you say, I will buy 5 Bitcoins at this price, I will buy 10 Bitcoins at 90,000, I will buy million Bitcoins at $15,000. Also, you can do this. But what's the chance, guys, really, for the Bitcoin to go all the way back to this level? I'm not saying it's impossible. We have seen this, that it pulled back Bitcoin, I believe maybe a year and a half ago, it pulled back all the way to 15K. But it doesn't mean that it will go back to this level any soon. Maybe it will go to this level in 20 years, maybe never. That's why you have to understand what is Bitcoin, what is the situation, what is the amount of people and institutions putting money inside this Bitcoin and so on and so forth, so that you understand how much money is there already in this system, this Bitcoin blockchain system, and that it doesn't make any kind of sense because there is so much money already put into the Bitcoin for the price to go all the way down to these kinds of levels. That's why you will probably put a limit order somewhere near, because you, at the end of the day, you want to buy Bitcoin, but you want to buy it for less money, cheaper than its current price. Also, you can put a limit order, a limit sell order here at $105,000, because we have seen already this kind of prices for Bitcoins. And imagine that you are holding a 1 Bitcoin in your hand, in your wallet, in your crypto wallet, and then you say, okay, but I'm willing to sell my Bitcoin for $105,000. And I'm willing to wait until the markets reach this level, and then I will sell. So the order will automatically, the platform will automatically execute this limit order and it will sell it. Because, of course, you want to sell it for the highest possible price you can get. That's why if you are selling and you have a limit order, you will put it above the current price. If you want to buy with a limit order, you will put the limit order below the current price. That's why you will see later on in the platforms when you're trading, if you are putting a market order, you simply say, I want to buy 5 Bitcoin, and it will use the current price. It doesn't ask you for a price. If you want to sell, also, you only say what amount of Bitcoin you want to sell, nothing more. But if you're putting a limit order, then the platform will ask you, okay, at what price you want to buy how much Bitcoins, or at which price you want to sell and how much Bitcoins. And that's the difference between limit orders and market orders. And now you know. For the leverage trading, I also already said. So the value is the total amount of the money that you're entering the order. So the market orders or the limit orders. So you say, I want to buy, and I want to buy with a value of $100. And this is the amount of money that you're putting in this specific trade. If you're using futures, so there is something that's called spot trading and future tradings. What it means, basically, if you're doing spot trading, you're actually buying the underlying asset right now at the given prices, or with limit order at the specific price, or selling at the specific price, or selling at the current price. So you can do it, but you're selling the actual asset, so actual Bitcoin. For the futures, if you have the futures types of trading, then it's a derivative. Then you are basically trading the future price. You are saying that you want to buy Bitcoin and you hope that it will go up, or you want to sell Bitcoin with a hope that it will go down. So that's why when we are talking about futures, you have two different kinds of orders, let's say, of actions. One is longing or long, and another one is short. So if you're betting, let's say betting, that the price from the current price from the here is going to go up because of I don't know what, then at this specific moment you will execute a long trade. You will enter a long trade using a market order because you want it at the current price. Also, you can enter a futures long trading with a limit order. So you will wait for the price to go into specific zone, to the specific price, and then you will long it. So you say, let's say, I know that Bitcoin will go all the way down to 90,000, and from there it will go up. That's why you are using futures. You are using long trade because you know it will go up, and you will use a limit. You will use a limit order because you say, okay, today it's 98,500, but tomorrow I know it will reach somewhere around, I guess, with small risk, $90,000, and from there on it will go back up. And it has so much sense to long or to buy Bitcoin from this price and to say it will go up from this, then to buy it here long, then it will go, first it will go down and then it will go up. The profit, let's say it will end up here at 105, the profit is all this, so from 90,000 to 105,000, and profit from this order will be only a part of it, so it will be 6,500. So understand, that's why you have these possibilities of trading the current price and the current asset. I want to buy Bitcoin now and I want to sell Bitcoin now, or I want to buy or sell actual Bitcoin when it reaches a certain price. That's spot trading and market and limit orders. And if I'm betting that the price in the future will be like this or like that, it will go up or it will go down, then I will use futures trading. If I'm betting that it will go up, I'm longing, and if I'm betting that the price will go down, I am shorting Bitcoin. And if I want to long it from the current price, then I enter with a market order. If I want to long it from a price that's lower than current price in the future, then I will enter a limit order. And basically that is it. Maybe it's complicated, maybe it's not, but that is it. What you need to know, the minimum, the basic how to trade. And then when you enter the trade, let's remove this. If you're doing futures trading, so you're betting the price in the future, what will be the price in the future. So it doesn't matter, it's like this. So you are saying, okay, I want to short it now. I want to short this Bitcoin. Shorting means that I'm guessing, betting that the price will go down. And I'm shorting it till when? Till a certain price. That's why you have two specific types of orders when you're doing futures. They are calling take profit and stop loss. You can do it also on spot trading, doesn't matter, but what it means, there are basically specific types of orders that will trigger once the price reaches a certain level. Let's say if you are going from here, from 60,000, and you are shorting Bitcoin and saying, I'm betting that it will go to 40,000. But this is just a, let's say, a bet, a guess. But you don't want to look the whole time in the platform, in the graphs. Okay, there are traders, professional traders who are sitting at their chair every day looking at the graphs. But let's say you don't have the time for it and you want to exit the trade at a specific price. So you're saying, I'm shorting Bitcoin from 60 to 40. When it reaches 40, I want to get out. So to get out, automatically, you present to the system, to the platforms, something that's called a take profit order. So you make an order here. So it will be take profit order. That will automatically get you out from this trade when it reaches $40,000. You can exit the trade with the entire amount of the Bitcoin you have put inside the trade or the value, or you can take out only a certain percentage. Let's say I want to take only 50% of my profits. And I will leave the trade open and the trade will continue like this, like that, it doesn't matter. And I will see what I will do. Maybe I will make another take profit order for the rest of the 50% of the value that I have put inside. But also you can guess that the price itself, it can go in another direction. So it can easily go up. It can maybe start like this and then it starts to go up. And then you start to lose money because you are betting that the price will go down, but the price reversed and it started to go up. And you started to lose your money in your order because you have placed an order here with a take profit order here. But also you don't want to look at the entire time in your charts and watching, okay, I want to get out if I lose more than 20% of my initial value of the order. That's why you put a stop loss order that will automatically get you out of the trade if the price will not go in your favor. So if the price reverses, it goes in the other direction, then you have put a bet, you have put your order, then you have this kind of secure order that will say, okay, if I lose more than 20%, I will automatically close your order and I will get out. That's why when you're looking at the professional traders, what they will often say, now maybe it makes sense, a lot of things, they say, okay, I'm entering, let's make an example. What do they say? They say, okay, I'm entering a Bitcoin long trade with 3-to-1 take profit to stop loss ratio. What it means that if the current price is 60,000, so the current price is 60,000, now I'm entering the trade and I'm saying, I bet that it will go up this time. So I'm betting on this kind of behavior of the price in the future. I'm putting a take profit and a stop loss orders that are in ratio, that has a ratio of 3-to-1, meaning, let's say that I will exit my trade with a take profit at 90,000, but if it's 3-to-1, here is 30,000, the difference between 90 and 60, and if it's 3-to-1, then you have a 10,000 difference for your stop loss. So the stop loss will be here. So you have take profit here and you have stop loss here. So what it means? It means that you're willing to let the price rise 3 times as much as you are willing to let the price go into an opposite direction that you're placing your order. And it's often 3-to-1, 2-to-1, and it's a good practice that you let this trade fulfill to the end, so that you don't stop it. You can always stop your order manually. You can close your orders manually. But it's good because you have made some kind of decision, you have made some kind of calculations, etc. It's good to let the order play out from the beginning to the end. And it's always good to have and to prepare a stop loss. Never make an order without a stop loss. You understand it. It's a safety mechanism. It's a safety net for you so that you don't lose your money. That's why it's often 3-to-1 or 2-to-1 or even 5-to-1. It's normally 3-to-1 or 2-to-1 take profit against the stop loss ratio. Because people sometimes they are not so, how do I say, they cannot wait, they are impatient, and then the price, when it comes to here, they manually close the order just to get the profits. And then what happens in most of the cases, price will still go up, and then if they let the price go up, they will have more profits. But nevertheless, I'm just saying how the things are going. So you now understand what are the take profits, the stop losses, the limit orders, the market orders, the futures, the spot trading, buy, sell, long and short. So that is it, what you need to understand. Also, when you're using leverage, so when you're using leverage, so you are borrowing money from the platform. So most of the platforms are giving the possibility to take the money and to borrow money from them. So if you're putting, as I said, times 5 leverage, then if you're putting 100 of your dollars, then the entire value will be 500. In this 500, 100 is yours. It's called the margin. And 400 is the borrowed money. Of course, then if you're entering your order with $500, it has a different kind of effect than you're entering the $100. Because if you are so sure that the Bitcoin will go up from this price, of course, then you will borrow money from banks, I don't know what, just to buy as much as Bitcoin as possible to have as much as profit as possible. That's why the platform gives you the possibility to borrow money, to leverage. Also, you have to understand when you are using leverage and when you're positioning yourself, then as the leverage gets higher and higher, then even the smallest movement in any direction of the price will have a large effect on your profits or on your losses. What it means? It means maybe if you go from 60,000 to 90,000 without leverage, obviously you will earn $30,000 per one Bitcoin. But if you go times 2, let's say times 2, and if you have one Bitcoin, if you trade with one Bitcoin, what it means when the price goes from $60,000 to $90,000, then you will earn 60,000. You will earn double because you have entered the trade with not with one Bitcoin, with two Bitcoins. You understand me? So you have not entered the trade with 60,000, you have entered the trade with 120,000, with two Bitcoins. And when the price went up to 90,000, you have a profit of 60,000, not. And if you go times 3, then the profit is obviously 90,000. And it sounds good, yeah. So why not put times 100? Then you will earn how much? 3 million. Or how many? Yeah. 3 million. Well, it goes the same thing, the same principles and the same effect applies if the price goes also in the other direction. So if you're starting to lose money, if you're not leveraging, if you don't use leverage, if it goes from 60 to 50,000, then you will lose only 10,000. If you are leveraging times 2, you will lose 20,000. If you times 3, you will lose $30,000. So understand, so if you are willing to lose only $10,000, so that's the whole amount you're willing to lose, that's your, let's say, your risk, then if you increase the leverage, this price, this stop loss price, it goes up and up and up, because even the smallest movement in any direction has a higher effect. So if you're not using leverage, it goes, this movement, so this distance is necessary for you to lose 10,000. But if you're times 3, then only this distance, 3 times less, is needed for you to lose $10,000. And if you have a high volatile asset like Bitcoin that goes up and down 20% each in one day or 30% in one day, Bitcoin can do this. Look at this. It goes like this. Let's say it goes like this. It goes like this, and it goes like this. You understand me? So you were right. The price will end up at 90,000. You are correct to take a long trade to say that it will go up. But if you have over-leveraged yourself and borrowed lots of money, then in this case, price will go all the way to your stop loss and it will automatically exit your trade with a loss. You will lose, without leverage, you will lose $10,000. If your leverage times 3, then if it goes only to this vicinity, to this level, you will lose $10,000 and you will be kicked out from the trade. If you want to say, okay, then you say, okay, I will put it here, your stop loss. Okay, but what you don't know what the price will go up and down in the future. What it means that you have decided to take a lot more risk to the downside. You said, I'm willing to risk $40,000 from your $60,000, and that's very, very risky, because you're not obeying to the law, to the good practice of having this 3-to-1 or 2-to-1 ratio between take profit and stop loss. You can have 40,000 of your risk to go into your loss, but then if you're willing to go $40,000 in your loss, you have to be willing to take profit of 120,000, and that's a high risk game. It's a high risk game. It can play out never. It can play out in one day. It can play out in 16 months. You never know. But that's why it's interesting to put these stop loss and take profit levels reasonably to include the behavior and the volatility of the Bitcoin, let's say, of the asset class itself. So if you know that Bitcoin goes up and down on a daily basis 10%, and you are willing to make an order and to trade for a month, to have an open order for a month, then it doesn't make any kind of sense to put a stop loss at 10% or less, because you will be kicked out, because it goes up and down. You will be kicked out, and you will never reach this 1 month period until the end. And if you don't, then there's a question. If you don't use leverage and you don't have a stop loss, what happens? In that case, if you're making a long trade from here, saying that the Bitcoin will go up, there is no leverage, then you will lose all your money, all of your money. Let's say you're putting $60,000, you have bought one Bitcoin, and you at this price, when you will be, let's say, liquidated, so it's called a liquidation, and if you don't have any kind of leverage, only if the Bitcoin goes to zero, then obviously you will be left with nothing. You will have no more money left. But if you're using leverage, so you are putting 60,000 of your dollars and then you're times 2 leveraging, so you are entering the trade with $120,000, then what it means that if the price goes to $30,000, you will be kicked out, because it's a double effect, times 2. What it means? It means that the platform will automatically shut your order, you'll exit your order, and you will have a loss of $60,000. You will be kicked out. You will be liquidated. And guys, if you want to learn more about certain topics that we are covering in this podcast, like how to do affiliate marketing, how to do trading, crypto, forex, finance, general finance, and you want to learn more about how to escape the ordinary, how to escape this matrix pit and know the information that I am personally learning, then you have a possibility to enroll and to find out more in this game changer application. So the application is also available through the link that is available on my personal page. So you have a link here in the descriptions that you can go and check by yourself.